Hey everyone, Catherine here. Today we're going to talk about no tax on tips and what it means for the spicy industry, who is included, who is excluded. I'm going to run through 3 links. I'm going to link them below in this video, and then I'm going to explain how the deduction actually works in a very simple and digestible format. Let's get into it. First, we're going to start on the IRS website. This is the official announcement as far as who is able to take this deduction and what defines a qualified tip. And I'm going to explain how this works, but I want to draw your attention to this last line here. Okay, so they added this at the end of September. So this is any amount received for illegal activity, prostitution services, or pornographic activity is not a qualified tip. But what does that mean? This went into effect because of this letter, which was written to the Secretary of Treasury by a coalition. And they specifically list not only just content creators, but they are saying that OnlyFans specifically should not be eligible to take this tax break because most of the content on this platform is pornographic. If you're familiar with the industry at all, you know that not necessarily all OnlyFans content is pornographic in nature. But now, according to this letter and the IRS guidance, basically, if you have a 1099 from Phoenix or from any other platform that is spicy in nature, you will not be eligible for this deduction. Next, I'm going to run through the Federal Register, which is showing who should in fact be included in this. Okay, so 205, that's dancers. 209, digital content creators. So this would mean that exotic dancers are in fact eligible for the no tax on tips deductions. Digital creators who are not spicy in nature are. So from my understanding, this would be people who are monetizing YouTube, TikTok. But if you are on OnlyFans, Fansly, Clips for Sale, that would take you out of this, unfortunately. And very, very simply explained, no tax on tips starts for the income that was earned in 2025. So we are in a transition year for the taxes that are due April 15th of 2026. This works if you are on a 1099 or a W-2. Basically, it allows you to exclude up to $25,000 from your federal taxable income. That's if you're filing single and if you're earning under $150,000. There's always fine print on this. There's always a little bit of a nuance. So this removes $25,000 in federal taxable income, but you still have to pay self-employment tax on it, and you are still having to pay state tax on it. And then when you are organizing your documents to give to your accountant, we need to see your total tipped income and your total taxable income. So for dancers, this is a little bit tricky because, as we know, every club in the United States is doing their payouts in a different way. So basically, your commissions and your wages would be in one box, and then your total tipped income would be in another. So if you sell a dance for $40, the split is 50-50 with the club, and you get tipped an additional $10 on that dance. The $10 goes into the tip bucket. And also for vanilla creators, if you have any way to determine what is a tip on like a TikTok live, then that would be a write-off as well. Not a write-off, it would be able to be excluded from your federal taxable income. But you need to work with an accountant on this because it's very nuanced and it's very new. But I did just want to clear up the confusion on the exotic dancers versus spicy creators versus vanilla creators. Again, you guys, I am just the messenger on this. I will, again, put the links below so you can check it out. And if you have any questions, you can set up a consultation call with me at my website, theonlyconsultant.com. You can find me on Instagram and TikTok at _only_consultant. Stay cool and stay compliant. Let me know in the comments if you want me to make a video on any other tax mix.